Good morning, everyone. Today is Sunday, August 23rd, and today is the Roddy update. It's the juicy update. It's the high yield dividend income update to see where we stand, at least over this past week, see how we doing, check out balances, this, that, and the other thing. We are live this morning on YouTube, obviously. Two YouTube channels still, Retire on Dividends, Retire on Options, and also on X through the Retire on Dividend, no D handle. All right, so real quick, good morning, Double D. You're first, you win. The fight is real, hey, hey. I don't think I've ever seen you. So welcome, welcome. Wolf, good morning, good morning. Good to see you. Hope everyone is having a good weekend. Yeah, we got one more day. SB's awake, so that's always a good thing, right? Who else we got? We got Alan. Alan's always awake, so that's another good thing. Black Mamba in the house. And we even got the biggest YouTuber of all time lately, LA Appliance. His channel's been growing and growing. Hopefully he can join the options party and go from there, and then start trading options on his channel. Rod, you hold the income on gold. Yes, I do. Well, I hold the curve version, which we'll get into towards the end. All right, Bitcoin update. How we doing? But Bitcoin had a really good week. If I pull up the 1 week, yeah, you're looking pretty, right? 64,000. It went up as high as what, 78? Some people are saying it hit 80. I don't see it hit 80. But now we're back down to 76. So again, looks like, what was it? As of 1 in the morning, went back down to 75. But either way, pretty damn good jump. It's been a long time since we had some good Bitcoin movement, it seems. But, headed in the right direction. So, we cannot complain. And all right, so let's talk about earnings for this following week. Just see anything big going on. Not really. Outside of Wednesday, but a couple banks earlier in the week. Zoom, Dick's Sporting Goods. But yeah, NVIDIA on the Wednesday. It's going to be after hours, of course. They'll move the market. But again, lately it seems like even if you have good earnings, you're going to tank. So who knows what to expect. By the way, hopefully I don't lose power. We're having some crazy storms at the moment. And I am soaked from letting the dog out. So anyway, that kind of woke me up too. But yeah, so that's for this week. And let's get right to it. Let's get to the options party. All right. So we have a couple positions that we're playing right now. And yeah, SOFI. All right. SOFI. All right. Let's see how they did this week, actually. We want to see how they moved over the 1 week, or we'll just say the 5-day, up 3.39%. Can't be mad about that. Again, SOFI is a Roddy position, so basically, synthetic in a way. It's a long call. And then it's basically a credit put spread. All the same expiration, 3 legs. The whole point of it is to gain exposure of the underlying and make income upon it. The reason for the puts is to limit the downside. Well, it's for one reason is to make the expense of the leap cheaper by selling the put, and then buying the put, you're limiting the downside from the sold put. Obviously, in the end, it's a credit that offsets the expense of the leap, which helps. But again, you want to make income. You want to make good income. So the problem here, or the problem has been on SOFI, is it's dropped so much. My cost basis is 2020. It's at the current price is 1891. So it's been a hell of a slow journey, but luckily these synthetics, they do expire June 16th. Anyway, for this week, what did we do? We just rolled 2 basically. I rolled the one that was expiring on the Friday, $21 strike. That's obviously the strike above my average cost basis. and I made 25 bucks on that. And then I had one, well, I have two expiring on September 4th. This week I will be away, so I cannot have any options going that week. So I'm slowly moving the 9.4s into the following week. And I moved that one, I rolled it into the 9.25. And actually, finally decided to sell a call above the 21. I did a 22 that paid me $15 because SoFi is moving, man. SoFi is moving, so hopefully we can gain some upside along the way, but we shall see. So let's hide that, and let's hide that. So we're left with 5 covered calls on 5 leaps, basically. So everything, we're selling calls on everything. So for the week on SoFi, I made $40. The total at risk of this position is $5,634. And DD, just so you know, if you annualize that sucker, it's 36%. I know. It's been a while since we had a good annualize, but had to do it. DD made me do it. All right, let's check the comments, see where we're at here. What's going on? Good week, 63K. We jumped. Remember my chart? No, I do not. This week is crucial. MSTR blew through my call. Oh no. You know, that's what happens. You know, we get, as soon as you sell that call, boom, then it pops. But someone's got to dare it to jump, right? Who let the dogs out? Yeah, me. And she's soaked now. So NVIDIA is pivotal for sure. Adds oil fire, blah, blah, blah. All right, Hoodie also finally launched. SoFi been selling cash secure puts under 12. Under 12. What? All right, let's keep going. Working the wheel. Good. Income brings me negative costs. There it is. Yep, there it is. Someone had to do it. All right. My whole house is awake already, so it doesn't even matter. I could scream and scream again and scream again. All right, so let's just jump on to NVDL. NVDL, little different here. This is just a straight up poor man's covered call. NVDL is the 2x leverage version of NVIDIA. It is a fun one, man. You can make really good money on NVDL. However, on the flip side, buying these leaps, they are not cheap. They are not cheap. We have 9. Of course, it's because of the split. We only had 3 at one point. But basically, we paid $8,597 out of pocket. Now that I look at this, I'm like, damn, who the hell would pay that? But at the time, I was buying the 33, the 29, and then it dropped, around the 25. So luckily, you could see the price. It came back to 33, which is when we started the position, thankfully. But I was averaging my cost basis down when I was dropping. All right. Anyway, so we bought the leaps. That's over. Now, what we do on NVDL is we roll 3 covered calls every single week. You could see I had 3 expiring this past week, a 32, a 33, and a 34. We actually ended up below the 34, but the 33 and the 32 were in the money. All right. I was in the process of rolling up a strike price and out, but I decided, you know what? Screw that. I'll keep some of these in the money, and I kept the 32, the 33, and the 34. Obviously only these 2 are in the money. This one's basically at the money. And these 3 that I rolled, I made an additional $512 in options premium. So again, pretty good freaking money on this one all the time, only for 3 contracts too. This coming week, not only do I have to roll these 3, but I have to roll these 3 again because I'm not gonna have the chance to do any trades the following week, or at least I don't think I am. So I have to, I'm gonna have a big income for NVDL next week, and it's gonna be a fun one. All right, so if we look at NVDL for the week, I made 512. Again, total at risk, or basically total capital being used, 8,597. That's a 309% annualized. You know, that's great and all, but if you look, we've only made 3,871 in total premium from NVDL. That's an average of 276.50 per week. We only have 16 weeks left, which is not a lot. So we're expected to make around 4,424. That's an estimated income of 8,295. You know, the leap cost is 8,597. However, we are expecting to make some money on the leap. I basically did the current value. I cut off 50% just for the hell of it. And I'm showing I can make around 3,380, which is a profit of 39%. And that's 39% over a period of about, 6-7 months. That's not even a full year. So if I annualize that, it'll be higher. So we'll just leave it here like this, though. Actually, you know what? Yeah, no, I don't feel like it. Anyway, so here's you can see the value of the leap. It's worth 7,365 at the moment. So, which, it's the extrinsic's gonna burn, man. It's gonna burn. It's burning now as we get closer to the expiration. So their hope is we really gain some money on the intrinsic. And I got to be honest, I don't even care if these in the monies get signed because 9 contracts is just annoying. It's too much work. Will I keep NVDL going when this is over? I may, because again, it's just like a fun degen play. But since it's so cheap, I just, it may just be a small fun position that we'll keep. And I don't know, I may buy a longer term leap. I know these leverage plays, they say you're not supposed to do that, but hey, I like to try my own thing and track how the extrinsic goes. Okay, let me see what's going on with the comments real quick. Let's see who's awake and who's not. All right. Only sell under 10, 12 on so yeah, but you ain't gonna get any money on. Unless you go way out in expiration. All right, Marcia's here. Was decay's the problem, the leverage. Yeah. Yes, it is. All right, what do we got here? I've been selling puts on SOXL, low delta, with a little luck, been doing well. You can go as low on the delta as you want, but SOXL, man, that thing moves. That thing will whoop your butt if it goes the wrong way. All right. Buy leaps on the underlying, not the leverage. See what I mean? People say do not buy the leverage on the long-term leaps. But, I like to try things out to see how they go, right? To see how it works, to track the extrinsic, to see how the movement works, right? Just because they say, oh, they decay. Of course they decay. Everything freaking decays, right? But how fast do they decay? I don't know. So it may be worth it. It may not. That's why I'll do a small, since NVDL is so damn cheap now, that's why we'll do a small position. All right. Are you ready? I said, are you ready? It's time. It's juicy time. All right. Anyway, for real, it's juicy time. One of the more exciting trades I've done in my options career. It's juicy. All right. What is juicy? Juicy. Basically, it's an in the money poor man's covered call. That's it. We just create a cool name, juicy for the juice of the premium. We're squeezing the juice, all of the freaking juice out. The juice being the extrinsic, of course. And that's what we're collecting as premium. That's what we're using to pay the bills. Oh, yeah. All right. Anyway, so what is juicy? You could see we bought a call on May 29th this year. It expires June 18th of next year. Great. Wonderful. Yippee-ki-yay. Now, it has a delta of 0.85, which that's, again, we were new to juicy. Was it a good delta? Sure. 0.9 would have been more helpful, maybe. I don't know. But it doesn't matter. It was in the money, 230 at the time, and it cost me $7,297. Obviously, buying a leap on IWM, which Russell 2000, is not cheap. It is not cheap. This is only 1 year out. So what do we want to do? We want to make money. We want to pay this off and then make an additional income on top of that. So that's what we're doing. That's our goal. All right. So let's see how this week panned out. All right. I made this fancy thing for the end. You'll see. Looks pretty cool. And I could share it on the socials. All right. So this week, I'm not going to lie. This week sucked because I'm so aggravated at myself because last week I rolled it when I was in basically we'll call it a lab testing at work, and I hadn't, I wanted to get it done and I rushed it and I screwed up and I forgot what my freaking delta was on the leap, and knowing it was high, it was 0.89. I ended up doing a delta on the call of 0.71, giving myself a net delta of 0.18, which is very high. Since the net delta was high, again, screwed up. My intrinsic protection was not as helpful. It was only 1.27% protection. And as you know, if we go to the change tab, IWM can move on average since January of 21 on a weekly basis. It can move about 2.3% either direction. All right. So yeah, 1.27. Is that good? And not really. Not really. And my protection number was 299.58. So again, I track this daily. You guys probably are familiar with this sheet. So you can see like every day, right? What's our magic number? Our magic number was 299.58. So if we go here, we started at what? 303. Okay, went down 303.50, 305, 304, 300, 301. Then we went down to 297, right? So we were overall down 1.9%. We're at 297. The hell's our number again? Our number was 299. So obviously we went under our protection. Luckily, the day after, I waited until the Friday this week. We did jump up. I took a risk waiting, but we did jump up to 299.63. 299.63 versus 299.58. Very close, still under. It is under the protection, the intrinsic protection, but honestly, it didn't matter. Since it was close, it ended up working out, and I'll show you the numbers. So, but overall, you could see here too, the intrinsic, the value of the call, zero, because we're under, right? We're basically out of the money. We went from 1.14% in the money to 0.12% out of the money. So our intrinsic on the covered call, it cost zero to close, which, that sounds great and all, but it's not, because that was our maximum protection on the downside. So if we continued to go down and down and down, we would just be losing money on the leap and not gaining money on the call, because we hit our cap, we hit our zero. All right. And that's why we have that protection number. That protection number is important, and it's important you get that right when you make the trade, because if you screw it up like I did, you can get in deep doo-doo. And you don't want to be in deep doo-doo. You don't want to screw this up. But again, on the flip side, I did want to see how this reacted. If it lost, essentially, it's not really a loss, but per se, but it went in the danger zone, and I did want to see how that would react. So at least I did get to, but at a very small level. All right, so the extrinsic left on it was about 18 cents. So we collected 86% of the extrinsic. Okay, so again, it ended up being a pretty damn good trade. So again, was it still, good? Was it good or bad? It was, and in the end, it was a really good week. All right, I'll give you the quick summary. I have the summary here under the juicy test. So again, week ending 8/21. So again, we started at 303.43. That was the price of IWM in the beginning of the trade. We closed at 299.63. So IWM dropped 1.25%. Juicy trade started at 7,763. That's the value of the total trade. And then the value of the total trade at the close was 7,860. So Juicy, again, overall it went up 1.25%. So Juicy beat the underlying by 2.5%, even though we went in our danger zone. But we barely went in the danger zone. So it was actually it was okay. So it was a really good week. So obviously, yeah, we whooped that ass. We whooped the underlying's ass. If anyone's counting, we're whooping ass, right? 12 weeks in, we've only lost to the underlying 3 times. In fact, out of all those 12 weeks, if you look at column H, the juicy trade, the juicy position has gone up in value 12 out of 12 weeks. You know, some weeks less than others, but it doesn't matter. But in the end, which is really what matters here, we have collected an extrinsic income, no matter what. Because if there's one thing that's sure, there's one thing that's guaranteed, the extrinsic premium will decay to 0, right? Again, we sell a call, the extrinsic is X, it'll go down to 0, you know, closer to the expiration date. So again, the point of this trade is I don't want to predict the market. I cannot predict the market. I don't really care what's going on in the market. I don't care about the news. I don't care about this, that, and the other thing. I care about collecting the damn premium. All right. So that is the point of this. All right. I know I'm capping upside, limiting upside. I just want to collect the extrinsic income, extrinsic premium, and that's it. And then hope that there's not huge jumps, especially on the downward side. If there's huge jumps on the upward, that's okay, because I would just adjust my position, because again, as it jumps upward, the extrinsic will burn out pretty quick, and as it burns out, okay, readjust, boom, done. All right. So anyway, our yield was actually kind of weak sauce, 79% for the extrinsic this week. All right. So now let's look at our new trade. All right. Are you ready? Boo, boo, boo. All right. So actually, let me make sure there's no comments or questions, because we are in the middle of the juicy trade. My favorite trade so far. Again, I may change my mind down the road. All right. All right. There's no squeezing the juice. Pauly Shore and Cinema movie reference. Anyone? I've seen that. Oh, did I see it? I think I saw that movie. I actually don't know it. Son-in-law. Pauly Shore. Yeah, Pauly Shore's annoying. He was in 7-Eleven squeezing the juice Slurpee. Oh, okay. All right, let's see. Very quiet on X. It always is. Even the people, there's actually more people watching on X than YouTube, but they're all quiet. They just sit there like do. So if you are on X and you're listening, do me a favor. Do me a favor, bro. Type something. Type chicken to China, the Chinese chicken. You have a drumstick and your brain stops sticking. Watching X-Files with no lights on. All right. Type whatever you want, just to show you're alive. All right. Got to rewatch your video from last night. Yeah. And he annualized that sucker. He did. Twice. All right. Let's see. Black Mamba, always typing in a lot of words here. You know I can't read. They're a high profit factor income strategy. It takes years to recalibrate, blah, blah. See, I already lost track of what you were saying. But yeah, for the info, squeezing juice. I had to look it up. Wheezing the juice. All right. Only years work in the industry, understand how to work the risk. All right, what are we talking about here? Funny, the stuff that sticks in your head. He is annoying. Yes, he is very annoying, but he's all right. He made a couple. I love stupid movies, and he's in a lot of them, so I do appreciate that. DD harvest the various risk. Now we got an acronym here: VRP, the spread between the implied and realized volatility using mathematically defined risk structures. You know, Black Mamba throwing out all these big words at the crack of dawn. So it's we're all trying to catch up to him at this point. But all right, let's look at the new trade. All right, we got a new trade. Don't forget, Juicy never closes until we get to the expiration, of course. So we open a new trade. What did we do? All right, so let's go to the beginning. At the time of the close, again, we don't close the other. We do a rolling order. All right, it's a little more work, because I got to update all the numbers and then make sure that the data is right. So when we rolled the trade, IWM was at 299.63. So the delta on the leap it dropped about 0.01 from the prior week. So it's at 0.88, which is still pretty damn good. So 0.88. So anyway, so the covered call, the net between the covered call, at least at the time of the roll, you want to do a net of like 0.1 ish. It can go up a little, it can go down, even down a little. I don't care if it's under 0.1, but ideally 0.1 may be the minimum. So I chose a delta of 0.75. To be honest, there was a little too big of a gap. I think the next one was like 0.8. So I'm like, that's like a 0.08 net. So I took the 0.75, which paid me more premium, but gave me a little less downside protection. Hey, but you got to figure we got our asses kicked a little bit last week, so maybe we won't go down as much. Again, we don't want to think that way. You know, even if that crosses my mind, what do I have to do? I have to go like this, smack myself in the face and say, you do not predict the market, son. You do not know what the heck the market is going to do. All right. So anyway, we didn't really try to do that, but this was really honestly the best delta I could find at the moment. So 0.75 brings a 0.12 delta. All right. And is that good? Yes, that's good. 0.12, 0.11, 0.10. Those are perfect deltas. All right. So it gave me, well, here's the outline. It paid you $581 per share in total premium. $463 is intrinsic. We don't give a crap. Is Rod out? Can you guys not hear me? Did I lose you? Hopefully not. That would suck. Can you hear me? Can you hear me now? I'll wait just to make sure the audio is working. Hello, hello. Hello, hello. Mic check 1 2 1 2. All right. Double D hears me. Good. So we're working. All right. SB, what's going on? Hopefully it's on your end. All right. Sorry. Let's continue. The extrinsic collected here, 118. All right. That's what matters. That's low. Look at last week, man. 136. And I thought last week was low, but this week 118. It is what it is, man. IV could have dropped. You know, whatever. Buyers be cheap asses. I don't know. So here we are. We collected. Well, we didn't collect. We got 118. You know, we do get it right away, but we have to burn it. We have to earn it as we go. And you could see this is the number. This pink is really what matters. Our downside protection number is 294.39. Is IWM going to drop under that number? Who in the hell knows? But the odds are likely in our favor that it shouldn't. All right. But the intrinsic downside protection is 1.75. We also have intrinsic plus extrinsic protection, which we do not want to use. But if we did, our downside total would be 293.06. So we really, again, per my math, I'm not saying this is 100% right. It could be off a few pennies, this and that. But we start to lose money if it goes under this number, not this number, although this is the number we don't want to go under. But we're gonna lose money on the trade if we go under this number. So we do not want to touch that number. Does that make sense, Chico? Huh? Chicos? All right. So real quick, looking at this trade heading into the week. Again, we opened it on the Friday. As of the close on the same day, we earned, I should say, 5.93%. We earned about that. Again, we have 5 trading days to go, and we will track it on a daily basis. So if you're curious to see how that plays out, I do update this on a daily after the market close each and every day to see how it reacts against the underlying, how the synthetic reacts, how the covered call reacts, how the whole thing reacts. Again, because I'm new. This is the first time I'm doing a trade like this, and I need to make sure for myself that it makes sense. This may be boring information for you guys, but it's actually very helpful for me, so I can actually talk about it in a way where I know what the hell I'm talking about half the time, right? Because I can't just do the trade without entering all these numbers, because I'd be like, this trade sucks. I'm losing money. I'm a cappity doodah. But if you actually break it down, it's a wonderful trade. All right, so let's look at the numbers now for this week. So this is where it got interesting. So what we do here, week in and week out. All right, let me actually, I'm gonna check the comments real quick. It looks like it's on SB size. Sing Gold Digger to be sure. Sure. She take my money when I'm in need. Yeah, she's a traveling friend indeed. Oh, she's a gold digger. Way uptown, that dig on me. Oh, can you hear me now? All right. Does that audio work? Does that audio work? Hey, if you didn't like that, then you got to blame the ruckus. It's his fault. That was the mic check. All right. Wow, it was going the whole time. I was stuck on the intro. So, DD, we missed you the whole time. You're going to have to catch the replay now. But hit Premiere, catch up with us, I prefer 55 to 65 delta on the leaps. Goal is to grow to 100 and to sell a calendar strangle to offset the cost. Jay Blizzard. Well, so you are predicting upside then. You are. I assume if you did not expect upside, you would not choose such a low delta. All right. Anyway, let's let's take a look. We have unrealized, which is the synthetic, which is the leap, right? The leap. That's unrealized because we're not settling that. We only settle that if we have to. We don't have to settle it. Again, it expires in June next year. We have the realized, that's from the covered calls. Those expire each week. So these are actually a realized transaction. Now, if you look at the green, this is the intrinsic income and outgo. Income, outgo. Sometimes we make money on the intrinsic on the leap. Sometimes we lose money on the intrinsic on the leap. But the offset is on the call. It's usually 1-to-1. This is the first week. Actually, I did break it down on here. I didn't even show you. I did. So if you look, the change in the intrinsic was 380. The intrinsic value of the call. I'm sorry, the leap. I can't talk. The intrinsic change. Again, the maximum intrinsic that we can collect on the call was 343. That's less than 380. So we lost out. All right, I need a water. We lost out on 37 cents. This is exactly what we did not want to happen. I'm glad it did, so we can see how it reacted. On the flip side, we actually gained 16 cents extrinsic on the leap, which is unusual, but I'll take it. And we also gained 118 of extrinsic on the covered call. All right. Does that make sense, suckers? All right. Now let's go back to where we were here. So you can see here our tracking, right? 380, we lost on the leap. 343, we gained on the call because, again, we went too far down. If we didn't go that far down, you would see a 380 here, a 1-to-1 offset. So this is the first week we lost money on the intrinsic. Not a lot, not enough to go crazy, but enough to be educated to understand, okay, this is not good. This not good. Okay, but it's okay. And as you can see here, extrinsic gain on the leap, awesome. Last week we lost 110 of extrinsic on the leap. This week we gained $16 on the extrinsic. Eventually, yeah, it's going to go to zero, but we're probably not going to let it expire, that far. All right, so extrinsic, we ended up collecting last week 118. This week, we're starting at 118, so we'll see how that goes, and we will go from there. I have a call expiring 8/28. Here's two problems that I have. Again, this is the problem of being an active options trader. Like I said, the week of 9/4, I will not be able to roll my trade. So I have to choose the following week's expiration. But the following week is supposed to be the next ex-dividend date. I think I'll have to, as we get closer, I'll be checking that. So I may, instead of choosing going out 2 weeks, I may go out 3 weeks, which again, I don't want to, but again, it's also a way to test it out to see how it would work. So I may just do it just because. And the reason is, as you get closer to the ex-dividend date, especially on IWM, right? If you're in the money and there's not a lot of extrinsic left, and there won't be, again, as you have a closer or less DTE, less days till expiration, the buyer is more likely to accept, and exercise their right to those shares. Because why? Because they want their dividend, right? They want dividend. All right. So they may exercise their right. And for that reason, I would prefer that not happen. So if I choose a expiration date that goes out a little further, then the extrinsic will be a little more, and the buyer is not going to take assignment. They're not going to exercise their right because they'll have to pay that money for the extrinsic, which they won't, right? So to me, I may go 3 weeks out. Don't be surprised if I go 3 weeks out. Obviously, the extrinsic on a 3-week trade versus a 1 week will be much more. And it would be interesting to see how that plays out over the 3 weeks. All right. And I know what you're saying. What happens if you get assigned though? Well, nothing. I mean, it's not really a bad thing, because there's a couple things we could do, right? We cover the difference, or we exercise, the leap, and then let that handle it, and then we reestablish a position. Whatever. If that day happens, we'll go over it. But until then, I would prefer to avoid assignment, because it's a pain in the ass. And that's simply put, it's a pain in the ass for me. I don't have the time to sit at the computer, to do this. The role is hard enough, but to adjust an assignment, no, thank you. All right. But yeah, we're looking at an estimated ex-dividend date of 9/15. If any of you have a better date than that, please let me know. All right. So you can see I noted the future X dates. This is just, again, when are we closing out the leap? Maybe around 21 days out. I don't know. But here is our beautiful summary. What do you guys think of this? Think if I share this on X, people are going to like it? They're going to be like, oh, this looks so pretty, right? All right. Anyway, so here's the summary. We got 43 weeks left for the juicy trade. Our average extrinsic income is $148. Sweet. Is that not sweet? That's pretty damn freaking sweet. All right. Our estimated future extrinsic income is $6,380. Oh, yeah. Oh, yeah. Right? That is worth it, brother. All right. So our estimated total extrinsic income will be hopefully around $8,309. Now, can you dig that? Sucker. All right. That's great. Well, we're not done. Our expense on the leap was $7,297. So our ending estimated extrinsic profit. This is just profit based on the extrinsic minus the expense of the leap, 1,012. All right. Now, if you calculate that, what's the return? It's looking like a 13%, which is that good for a year? It's all right, but we're not done. We ain't done, son. If the underlying stays at the price that it is at the time we open the trade or is higher, we will collect back the amount of intrinsic that we paid at the time we opened the freaking leap. And that is my plan. We are going to collect $5,988. So as long as we collect that on top, that means we would have what? 7,000. Yeah, 7,054. No, that's with the profit. I'm sorry. 14,297. So with the leap and the estimated extrinsic, if I highlight these two, that's how we get the 14,297. Of course, you have to subtract out the expense of the leap. Our ending profit would be 7,054. And guess what, guys? If you annualize that sucker, again, this is about a 1 year position, 95%. That's the end goal, 95%. Again, it fluctuates week in and week out. Sometimes it's more, sometimes it's less. But either way, around that number for, minimal, downside worry, it's worth it. Yes, 100% it's worth it. Worth it. For me, I don't know. You guys got to give me some feedback, bros. All right. Does this make sense? Does this seem like a good trade, or am I wasting my time? What do you think? Come on, Cletus. All right. So here's the summary. Here's where I got the value. Because you could see, man, look at the intrinsic price we paid, $5,988. We're going to get that back. In fact, our intrinsic is actually worth more, $1,008 more, but we're not counting that $1,008 because don't forget, we're losing money of intrinsic week in, well, not every week, but on the covered call, if we stay in the money, right, if we go higher and higher, which the underlying overall has been going higher, we're going to be paying out of pocket. So we got to get that back. So the excess intrinsic, we're collecting that to offset the realized intrinsic loss on the covered call. All right. So that's why I'm not counting the 1,008, but I will count the 5,988 because that was the intrinsic cost at the time. Any movement after that, it is what it is. It is what it is. It's an offset. All right. Now, on the flip side, the extrinsic, this is basically the cost of the leap, 1,309. Now, we're still worth 913. So it's gone down. Yeah, it's gone down, but it's still worth something. It's still worth a damn, which is good, and it's going to be worth something until the expiration date goes to the current date, 6/18/27. So, like I said, I don't know. I don't know, man. What can I say? It's a freaking beautiful trade. It's a beauty. I know. I'm kissing Juicy's ass, but hey, it's a great trade. Anyway, since I'm going to post this clip as a separate video, and I will post it on the Tuesday morning as a replay in case you guys fell asleep, in case you got lost, or in case you missed it, I must let you know this juicy information was not financial advice. I am not a financial advisor, and this juicy trade information was for fun and entertainment. So hopefully you had fun. Hopefully you're entertained. But hey, we're still live, so we're still going. For those of you watching that juicy trade, the video is over. All right, let's talk about the VIX, man. The VIX is freaking whack. Let's be real. The VIX, aka Freddie trade, our boy ambassador named it Freddie. So we will roll with it. It has a, I don't even know, fear or something. A lot of words there, but it spells out Freddie. So what am I doing with the VIX? It's a hedge. It's a hedge, right? Against the market. If the market flips, if the market gets fearful again, the VIX will go up. The VIX was down. The VIX was down to 1460, 1445 when I purchased these three leaps, these three long-term calls that expire on April 21st of 27. So 14 is typically around the lowest range the VIX will go. Let me take a sip of coffee. So that's why we buy leaps. And we could end it there. We can. We don't have to do anything further because then when the VIX spikes to say 20, 30 even, what can we do? We could sell the leap and just make money. And that's our hedge. This is a hedge against, the market. But we don't wait because we're degenerates and now we're selling calls. All right. We're selling calls when it pops up, but we sell calls at least the value, the cost of the leap plus the strike of our leap. So 14 plus 840, right? Obviously, we choose the strike above that, which is 23. That is the minimum. All right. And if it goes above 23, then that's why our ass is protected. Now, here's the thing, though, and I want to share this just so you guys know. This is interesting. So I'm tracking the VIX trade as we go. So you could see when I open the covered call, this is not from the beginning, by the way. So I apologize. I'm tracking it. We'll just call it as of 8/19. You could see, check this out. The VIX went from 1489 to 1601 in one day. That's a 7.52% move. All right. Now, you would think, oh yeah, and the IV went from 86% to 89%. So the IV went up. But look at the cost of my leap. It went from 983 to 688. The intrinsic value went up because you can't adjust. That is what it is. The intrinsic is what it is. But the extrinsic went from 894 to 687, even though the IV was higher. So again, this is what's screwy with the VIX. When you do a poor man's covered call, essentially, it's not a direct, like, whatever the word is. It's, I don't know, man. It's a little screwy. So you got to be careful if you're trading the VIX, if you're doing the calls in the VIX. I'm still going to do it because the way, again, as long as I'm going to make that money on the intrinsic, I'm not worried about the stupid extrinsic, all right? So it is what it is. It's all whack, and I understand that. And this is clear, and I'm going to continue to track it to see how whack it is, right? You can see it gained, like the VIX dropped 5.5%. The IV dropped 5% or 4%, and the extrinsic value went up. So what the heck is that? I don't know. I'm not going to figure it out. It just is what it is. The VIX is whack, right? Or on crack, as I said the other day. The VIX is on crack. Freddie's on crack, So anyway, what do we got here? Any comments? You guys awake? That's good. That's how I'm playing. Yeah, so you're bullish on Tesla, Microsoft, and gold and QQQ. Sucker leaps on the VIX. Not a good play, brother. Better sell puts. Yeah. I mean, that's not a bad way either, right? Just sell puts. If you get exercise at 12, what's bad? Well, oh yeah, if you sell puts at 12, yeah, you ain't going to get exercise. Well, you can't get exercise on the VIX, which is another good thing about it. All right. Anyway, let's move on from the VIX. And now we talk about T to the S to the L to the L. I said T to the S to the L to the L. All right. So how'd they do this week? Oh, damn. They went up 11.53%. Now we like that. We like that. All right. So that means Tesla went up about 5, right? Or whatever. So again, a couple things here. So I had two puts expiring this week, 6 and a 7. TSLL closed at 977, obviously above these two. So these two expired worthless. I had another put for 7 expiring the following week. I actually did a buy to close on that one. I only paid a penny. So you can see buy to close, baby. So those 3 puts are bye-bye. Bye-bye. So when you sell puts, yeah, you got to put up collateral, bro. How much collateral did I put up? 600 plus 700 plus 700, $2,000. So that collateral was on hold at the time. Since all of those puts went bye-bye, guess what? I get that collateral back, and that's no longer a pending transaction on my account. So let's hide that sucker. We also had an $8 call that was expiring on the 4th. As you know, I'm rolling all the 4th positions out. And this $8, yeah, I rolled it. Where the hell did I roll it to? 925. Yeah, I think I rolled it here. Now, here's the interesting play. So, as you know, when TSLL dropped, I was, it was very low under my cost basis. My cost basis, in case you're wondering, I'll show you real quick. Without including premium, I don't include premium. Why? Because the premium I live off of. All right. I'm not using premium. I'm not cheating and using premium to calculate my cost basis. My cost basis without premium is 1180. Is that good? It's not bad. It's not great, but it is what it is. So I was selling calls at 7. Is that smart, bro? You could say yes. You could say no. I don't care. It doesn't matter. But obviously, it's gone up since then. So in a way, I kind of dared it. Go, do it. So I decided I'm going to roll this up to an at-the-money call, which around that time was about 850. So I rolled it to 850. I paid a debit of how much? You can look here, $90. So I'd pay $90. So what I'm going to do now, anytime I'm playing this one contract at a time, if that one contract goes so far in the money that I can't roll it for a credit, I will roll the strike price up. And you can see I did that here. I rolled it up, but I need to offset that expense. So since I have 1,500 shares, I have 15 contracts. I used another contract to sell at the 850. I like to preferably do it at the same week, but I had to go one more week out. So now I have another 850. That paid me 100. It offset the expense to roll up the other. And in the end, it was a net $10. All right. So that is my plan moving forward. We'll see how it works out. Again, I have so many damn contracts because in the end, TSLL, it's not just going to keep going up and up and up every week. It's going to go up and up and up and down, 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 and up and up and down, down, down. And then we'll plateau. So I will utilize these other contracts instead of them just sitting there collecting dust, doing nothing. I will use them to protect and save my other contracts from just sitting in the money. Because again, we know Tesla, man, Tesla moves. And once it starts going, you want to be ready. So let's adjust the trades as we go. All right. So I have another call. It expires September 11th. It's a 750. That's in the money. That's very in the money. So what are we going to do? Same thing. We're going to use another contract to offset the expense of rolling the strike price up. Unless somehow we can roll this up ourselves to an at-the-money call for a credit, which more than likely is not going to happen unless TSLL price drops. Does that make sense, everyone? Hello? 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 Let me check the comments. Susie here. What's up? What's up? All right, let's see. I use premium to decide what I need to be profitable if I decide to get out. Well, yeah, it's more of like, think of it like a bailout. Like you use it to justify something, like in your head, right? Because in the end, okay, technically, overall, I'm not losing, right? But that is a last resort for me. That doesn't mean I write my account unless I want to. Yeah, exactly. No, I get it. Tesla already moved, bro. Timing is important. Tesla moved, yeah. And now what? Now what's it gonna do? Who knows? Who cares, right? But we'll just trade it along the way. All right. So covered call wise, I got 1, 2, 3, 4, 5. Okay, that's a lot. That's 1/3. So you can see I own 1,500 shares. I got 500 covered calls. That leaves 1,000 uncovered. So we'll see how it goes. We'll see if this strategy works or if it's stupid. We don't know. All right. Anyway, for this week, I made $159 in options premium. How much at risk? 22,000. Let me lock this in. Pay special, which is a little better than what it was. And that's a 37% annualized, which is not great, but it's good. It's pretty damn good, considering. All right. Anyway, so that's TSLL. Let's talk about BITX. BITX. You kill me, BITX. You were supposed to wait to run up. I wanted to get assigned a few more contracts, and I did not. Unfortunately, I only have 100 shares because, again, 12 was my magic number. And now it's run to 17. Not cool. In fact, you want to look at this? Look at this, man. It'll come back down, I'm sure. But for right now, it's like, look at, oh, man, 48% jump. 48%. Let's see what IBIT did, by the way. Is this a double? Is this a double? Wait, what? No, it's a 1 day. Yeah, 40. Wow. It's more than double. See? I like you, BITX. You're my friend. You're my friend. Your option chain sucks, but I like you, man. All right, anyway, we got a $10 put that expired. Yeah, fine, ain't worthless. Loser. All right, so anyway, so let's hide that. You can see I'm still selling puts at 12. Not getting much. Got 21 bucks. Again, we got to sign 100 shares at 12. I'm not selling calls on that because the plan with this trade, the plan with this wheel is a 50-50, right? I'm selling calls on 50%. I'm leaving 50% because I am bullish long-term on the Bitcoin. All right. But if the Bitcoin is going to keep it running, then we're going to have to accept a higher strike price than 12, maybe 13, 14, 15. But right now it's at 17. Is it going to come back down? Maybe. I think so. I know people keep saying, "Oh, Bitcoin is going to drop." I'm like, whatever, let it do its thing, right? I don't know, whatever, right? I'm no, I tried to do my best. The one thing I do know about Bitcoin is I will look out for the halving, the next halving. So when that comes about, yeah, people are probably going to start having FOMO buying in. So we'll keep an eye out for that. All right, Chicos. All right, so let's see our numbers here. Did I didn't update this. So our puts, let's check out our puts. So yeah, we only got rid of one put there. Did we add the 15? We did not. Okay, so total at risk with the puts 4,500, with the calls 1,200. That's $5,700. So if you make 5,700, I'm sorry, if you're risking 5,700 and you made 21, that's an annualized yield of 19%. That is like booty. That's booty, bro. But hey, whatever, man. Whatever. It's good enough. All right. All right. So someone asked me about gold, what gold fund I own. I own KGLD. This is the high yield dividend discussion part of the show. There I am trying to, and I posted this on X yesterday, I am creating a dividend income powerhouse, not only through high yield ETFs, but obviously my options that I'm doing. So it's a mix. It's about 50-50, I'd say. And it keeps me honest. But the difference is with the dividend ETFs that I'm choosing, honestly, I'm playing it a little safer. I want funds that can have a chance. I'm not saying definitely have, but at least have a chance to keep a stable NAV or go higher while paying you whatever yield that they're at. KGLD has a proven track record to do that. So they've been paying the 15% and, maintaining a decent price. BTCI is the best option I found for Bitcoin. So I'm going to keep them. Again, T-SPY, they do 0 DTEs. I want to do 0 DTEs, but I cannot due to my work schedule. So I let T-SPY do it. I pay the expense. All of these have an expense ratio. This ain't free. There's bros behind the screens doing the work. So you got to pay them. Is it a high expense ratio? I don't know. You determine that, man. I don't think so. This shit ain't easy, right? Especially if you see that they're active. Like, you got to appreciate it, man. It's not easy. Whether the fund is awesome or it sucks, it's still work. Again, they all have a strategy. All right, coffee's tasting really good. All right, let's move on. I did add OVL. I just added like 10 shares at the moment. But I decided, all right, I can have more than one S&P fund. I'll do it. One does typically 0 DTEs. I believe it's more so than not on the credit spread side, credit call spread. OVLs, like the put spread, but they go 2 weeks out. Either way, one is 0 DTE, one is like 2-week DTE or 14 DTE. And one, I think they complement each other. That's just my opinion. So I like having both of these. 10% is the minimum I will accept, though, as a yield in this portfolio, in this we'll call it the new dividend portfolio. All right. All right. TSLL, obviously, I sell options on that, but they do pay a yield. So it has to be noted. BITX, same thing. They pay a yield, but since I trade them, here they are. In fact, they paid me $1.12 this week. Woohoo! All right, TDAC, same thing, 0 DTE, but it's on the NASDAQ. Great. I'll let them do it. But they pay a higher yield because the NASDAQ is obviously a little more volatile than the S&P 500. Again, solid fund. Do I have an OVL for the NASDAQ? No. Do they have one? Maybe. I don't even know. I haven't even looked. But if they do, maybe I'll look into it. Now, MLPI, again, this energy sector, man, I don't know nothing about it, but I want the exposure. Typically, when the market drops, you'll see energy stocks kind of just go up. You know, they're almost like a hedge sometimes, it seems. But I mean, MLPI, I was told there's other options because they don't have everything, man. They're not everything. So NDIV and XLEI are good complements to. So I actually have 3 energy ETFs. I don't know what everyone's thoughts are on these, but I have MLPI, NDIV, and XLEI, various yields. Actually, 2 of the 3 have 100% margin maintenance, which is unusual. But again, I don't care. I don't even use margin. That does bother me in a way, but it's like, all right, I'll excuse it. Maybe because I know one of these are new. Maybe that's the reason, but I don't know. It's a good question for Charles Schwab. But yeah, these 3, let me know what you think of these 3. And then I have KYLD. This is the high yield sucker, the crazy one of the group, man. I love you, man, but you crazy. Yeah, that's KYLD. They only pay a 23% yield though, so they're not too crazy. But I'm a fan. It's been performing pretty decent. And then one of my like OG favorites. I owned this back in the day, and I sold it because I was like a high yield degenerate. I'm like 12%. That's stupid. But now that my brokerage is turning into my everything account, my bill pay account, my live account, this 12% yield is acceptable because HCal does wonderful. They invest in companies that have good cash flow, upwards cash flow, companies that actually raise the dividend, and they sell calls on these companies. So it's just, I don't know. It's a beautiful. So this is my setup. Will I add? Will I remove as I go? Absolutely. All right. So who paid me this week? BTCI 62.89. That's a 1-month payment. So that's solid. BITX $1.12. TDAC $35. MLPI $32. KYLD $12. $143 from high yield dividends. Is that a lot of money? No, it's not, but it's decent. Total income for the week. We got $870 from options premium, $143 from high yield dividends. If you net the 2, we made over $1,000 this week, $1,013.37. Total capital used for this, $51,743. That's 1.96% return on a weekly basis. And I won't do it again. But if you annualize that, 101%. So good. The weekly goal will go up. I am working on my bills. I'm going to start tracking all my bills to calculate how much I need to make to pay the bills, because I'm going to pay the bills. All the bills are coming out of the brokerage now. All right. Which, to be honest, it's a pain in the ass. Not going to lie, pain in the ass, but it takes time. We'll do it. We'll do it, bro. All right. So here's the recap. SOFI brought me 40. NVDL brought me 512. The VIX brought me 20. IWM brought me 118. TSLL, good week, TSLL, 159. BITX, 21. Various high yield ETFs, 143. And that is a total of 1,013. Sucker. All right. That's a really good week. I think so. What do you guys think? All right. Let me check the comments real quick. All right. 300. If Bitcoin goes to 30 million, I am retired. Hey, Double D, you'll be retired sooner, very soon. It's a coming. I want Bitcoin by years. Yeah, man. My Bitcoin exposure's in the income funds now. I've been adding XLEI to my income portfolio. All right, awesome. So, do you only own that as your energy option, never broken 25, or do you have others? And what are your thoughts on the 3 that I have? All right, here we go. OVQ is coming out. Okay. All right. So they're going to have a NASDAQ option. All right. So I'm sure it'll work well too. Good for them, man. They're in it. Yeah. They in it. Wait, do I have any other comments here? I do. All right. Oh, so you have MLPI too. All right, sweet. Check out the other one. Let me know what you think. If you think it should be added or it's just kind of, because some of it's repetitive. All right, so let's talk about our balance Again, I want to get to 100K by the end of the year, preferably. We jumped 5%, the total balance for the week. So part of that, I'm not going to lie, I did put in $1,500 to help it out. But part of it was the market did well. Bitcoin did well. It was a good week, solid week. Cash position 18,000, options pending 4,900. We have about 13.9 in actual cash. That's 20% of the portfolio. What number should that be? I don't know. I seriously don't, but I like that number. Total margin I can use for withdrawal. Again, this is withdrawable margin, not trading margin. 13,700, which is 20% of the portfolio. Yield required using the 2,000 number based on the balance is 35%. But again, that's based on $2,000 worth of bills. We're about to have many more bills coming out of this account, which will exceed that $2,000 number, and more to come from that. All right, so that wraps it up, suckers. We have about 149 of you live between YouTube, both 2 YouTubes and 1 X account. I appreciate you all being here. If you have any questions related to the juicy, related to the Roddy, related to poor man's covered call, related to the wheel, related to high yield dividends, or just in relation to my content, feedback is appreciated, whether good or bad. You will not hurt my feelings if it's bad. Don't worry. Another closed-end fund on energy is SRV, but only shows up in the stock comparison. Yeah, these closed-end funds. What do you mean another? Who's the other closed-end fund? Yeah, I don't really buy closed-end funds. Ooh, the sun's coming out. What a whack storm. All right, ladies and gentlemen, I must mention that this is not financial advice. I am not a financial advisor. Believe it or not, I am not a financial advisor. And this video was for fun and entertainment. So hopefully you had fun. Hopefully you're entertained. If not, whatever. Come back next week. Hopefully I'll be doing the Saturday next week. I didn't get the chance to talk about it during the juicy. Unfortunately, I completely forgot. And I know I forget. But I did want to mention our boy Smitty ran this for me, which is awesome. Awesome. This is awesome. But when you establish the leap, is it worth it to go out further and further and further and further and further? Yes. The answer is yes. 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 You can see on the right-hand side, whether you choose, in earlier dates at the top, later dates at the bottom, the savings per month, you can see, are on the right. All right. Obviously, the leap will cost more money as you go up, as you go further out. This is using about an 80 delta because obviously the intrinsic will be more money, but and even the extrinsic will be more money. But overall, like on a per month basis, you are spending less money. So again, that first year will be the most expensive. That first 6 months will be the most expensive, right? But as you go out a year, go out year and a half, go out 2 years, if you calculate the monthly expense of the extrinsic, especially because the intrinsic is nothing you could do. Of the extrinsic, yes, you are saving money. In fact, look, well, actually the latest month is lower, but looks like the dates, the extrinsic savings, especially in the middle here, like, oh no, I'm sorry. This is the extrinsic cost per month. In the beginning, with a January 27, you're paying about 174 per month in extrinsic. But if you go out December of 28, you're only paying 104 per month in extrinsic. You can make that no problem. And that's the point, right? To pay off that extrinsic expense. So I'm sorry I didn't get to cover this during the juicy coverage, which I wanted to, but it is what it is. But anyway, shout out to Smitty. He's like an AI genius. I asked my question. He's like, yeah. Anyway, let me know what your thoughts are on that. I'm gonna play since Double D's here. Let's play his juicy song and let's chit chat in the comments. And I'm gonna drink my coffee with you guys. All right, because I want to take a break too. Right? I need to drink my damn coffee. All right, so let's play the juicy song, courtesy of Double D, Dividend Degenerate, who, by the way, we got to help him out, get to 1,000 subs. So share his channel, suckers.
Yeah. Sip that coffee. It was all a dream, but now we got Juicy on the team. Roddy Squad, let's ride. J-U-C-Y, it's juicy, it's juicy. Deep po man's cover call, it moves me. And loop in the money, Delta high like 85. Set them in the money calls, watch the premium fly. Juicy, juicy, big juicy. Russell 2000 IWM, it fits me. 7K instead of 29K, that's the cost. Poor man cover call every single day. Started with a dream, Word Up magazine in my hand. Now I'm trading Russell small caps, making premium grand. Bought that leap deep in the money, strike 230. IWM at 289, intrinsic looking pretty. Delta 85, it moves almost 1-to-1. Sell weekly calls above it, income rain when it's done. Don't care if it dips, don't care if it rips. Premium keep coming, watch the account flip. Time King show the way, deep poor man style. 7,300 versus 30 grand, that's how we smile. Black Rock, ETF, small caps in the game. We ride the range. J-U-C-Y, it's juicy. Juicy, baby. Deep poor man's cover call. And moves, let's go. Up in the money, Delta high like 85. Sell them in the money calls, watch the premium fly. Juicy, juicy. Big juicy, Roddy portfolio looking super juicy. Coffee sip, screen flip, think of swim on the grind. Update that spreadsheet, keep the numbers aligned. Intrinsic, extrinsic, break it down clean. Time decay on them short calls, that's the green machine. IWM do its own thing, sometimes like the cube. But with Juicy in the squad, we still collect the dues. Not financial advice, do your research, fam. But once you go deep, poor man, you never go back down. From baseball nights to late night charts, retire on the options, taking it to the charge. Juicy newest member, welcome to the Roddy crew. Big Juicy returns coming straight for you. It's thick, it's deep, Delta high, premium sweet. Not a share in sight, but we on the upside. Juicy got the whole squad feeling alright. J-U-C-Y, it's juicy, juicy. Deep poor man's cover call, it fits me. Leap short calls, income daily. Roddy forever, we eating gravy. Juicy, juicy. Big juicy, beat options flowing, dividends sweet. From the Russell 2000 to your whole portfolio, meet Juicy. Now let that big go, yeah. Welcome to the family, Juicy. Yeah, retire on options, we out. Ladies and gentlemen, boys and girls, yield lovers of all ages, welcome to Guestamania! Come on, come on. Boom, pow. Oh. Yeah, yeah. Check it, ticker lights and pyro flames, covered calls and crazy games. MSTY enters the ring, cash flow belts and payout kings. Volatility running high, beta lovers riding by. NVDL throwing blows, nobody knows where the payout goes. Oh yeah, step into a distribution. Styling and profiling yield solutions. Brother, what you gonna do tonight when the payouts run wild on you? Guestamania! Who's gonna call it right? Guestamania! Come on, yield lovers unite! Covered calls and cash flow dreams, high yield louder than it seems. Guestamania! We're chasing glory tonight. Honey flexing center stage, OT locked inside the cage. YieldMax climbing off the ropes. Every payout fuels the hopes. Can you smell what YieldMax cooks? Everybody's getting hooked. Charts are pumping, premiums fly. Some get paid and some ask why. Who called MSI? Who nailed NVD? Who called MSI? Who nailed NVD? Glass breaks, crowd goes insane. drops again. The champ is yield. R to the O, R to the D. And that's the bottom line, 'cause the cash flow said so. Guess the mania, no script, no excuse. Guess the mania, grit only, never lose. Arena lights and payout flames, everybody shout the names. Guess the mania, oh, we're chasing glory tonight. This is not financial advice. Always seek professional advice. We hope you were entertained, and if not, we'll do better next time. And if you made it this far and want to prove it, you gotta say the keyword. R to the O, O to the D. You know me! You know me!
Damn, that's a pretty good song. Anyway, if you made it this far in the video and you want to prove it, sorry, DD, Guess the Mania does not live, at least not yet. The keyword today is annualize that sucker. That's it. Annualize that sucker. All right. Anyway, I'm out of here. Thank you for watching and have a good day. Later.